This last week began with a large rally in the spot silver price, rising nearly 9% on Monday alone. The last time the spot silver price had a jump that extreme was back in late 2008, as the first round of quantitative easing began by the Fiat Federal Reserve. While there are a few key data points that we're going to update for you, CNBC in India had the following coverage on silver this week.
But I'm looking at silver as well because we're looking at very strong gains into this one in this week as well. We're trading at a 3-month highs and the prices have gained up by 8% in this week. When you look at the international range, we've traded between $18 on the lower side to nearly $27 per ounce on the higher side. In the Indian markets, the current year range has been from 51,000 to 73,000 and we're trading at around 61,000 right now. The highest that you have seen in case of silver prices ever has been at around 79,000 rupees per kg, and we did come close to those kind of levels in this year. It has been a very volatile year when you look at that in case of silver there, but the markets will keep an eye also on the fundamentals here, where you are looking at the physical buying being on the stronger side, not so much in case of investment buying, but the physical buying in Asian markets, in Europe, in Middle East has been quite strong when you look at silver. For the Indian markets, though, the numbers are even better. If you look at the COMEX warehouse inventories, they are at just about 313 million ounce, which actually is the lowest since June 2020. Also, when you look at the LBMA vault holdings, those are at around 28,000 tons, which is the lowest since July 2016 as well. So inventories, mine supplies in case of silver have been on the weaker side there. For India, though, the imports that we are looking at are the third highest on record at around 6,200 tons of silver import is what we've done in this year already until now. All-time high number was in 2015 at 7,530 tons. So a very strong silver buying, whether it's about industrial demand, gifting, rural buying, all of that really seems to be picking up for a second straight year into this one. This is what we've done in sense of Indian imports, and as you can see, it has been a rising year after year. 2020 was COVID year, and the last year as well saw lesser imports. But this year, as you can see, we are looking at a stronger number there. The next chart that comes on your screen is about the global supply and demand numbers. That tells you that we are looking at a deficit for a second straight year this time around. 2021 was a deficit year, first time after 2015, after 6 years of enough supplies into the market. But as you can see, last year demand was higher, and this year the demand is expected even higher, so much so that the Silver Institute says that you could be looking at record silver demand for 2022 this time around. When you look at the deficit numbers, Silver Institute expects deficit at around 2,024 tons. Metal Focus is estimating it at 71.5 million versus 51.8 million ounces of a deficit in the previous year as well.
Silver in fiat rupee terms is not far off from its all-time nominal record price high. The same can be said about gold in fiat rupee terms in India. Gold is becoming an affordium, if you will, and thus we see supposed poor man's gold, silver, getting a massive import bid into India. It's likely to break its 2015 import record number by the end of this year, 2022. Both of her total COMEX Silver Warehouse and London Silver Warehouse figures require updating, though. COMEX registered silver dipped again this week, nearly breaking below 40 million ounces. The combination of deliverable registered and non-deliverable eligible piles are just over 312 million ounces at the end of this week. London Silver Warehouse pile continues to shrink to now the lowest level on record. Updated today through the end of last month, September 2022, London vaults lost over 45 million troy ounces last month. That's a hoard larger than the entire COMEX registered category of just over 40 million troy ounces. Since the start of the silver squeeze movement in Q1 2021, over 317 million ounces of silver have left the combined London and COMEX silver warehouses. The majority of silver that sits in London at the moment is already spoken for in unsecured silver ETF piles, and COMEX often double counts that metal as well. The amount of silver float in London when this chart gets updated may be less than 10,000 metric tons. That's not much larger of a pile than what India alone will import this year in 2022.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible Bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part.
Both the spot silver price and spot gold price rose in trading this week. The spot silver price closes just over 20 an ounce, and gold's bid price finished just below 1,700 an ounce for the week's trading. The gold-silver ratio fell slightly to close at 84 for the week, dipping as low as 81 earlier on in the week. Despite the underlying fundamental bullishness for silver, market commentators and consultancy Metals Focus released a note this week stating their belief that silver and gold spot prices in fiat US dollar terms still face headwinds to close this year, as the Fiat Federal Reserve looks to raise their federal funds rate again this month, driving what they expect will be further relative strength in the fiat US dollar to come. In terms of perhaps one of the biggest risks underlying the global financial system at the moment, it's become the potential failure of major commercial bank names in Europe. Credit default swap rates are climbing on major European bank names, reflecting the increasing amounts of insurance being bought in case the likes of Credit Suisse, BNP, Deutsche Bank, or UBS fail. All four of these banks are defined as global systematically important banks, named by the Bank for International Settlements Financial Stability Board. If any of these names failed, the amount of contingent derivative bet contagion could freeze up the entire global financial system. In late 2014, the G20, the world's largest 20 economies, signed supranational laws stating that in the next banking failure crisis, it will not be met with bank bailouts, but rather bank bail-ins. We made a video on the very real threat of bank bail-ins in late 2019, and we're going to leave a link to that video in the comments below if you missed it. It is this ongoing, underlying fundamental fact which is driving many investors around the world, from India, China, the EU, and here in North America, to increasingly become their own banks by owning prudent stashes of bullion outright and outside of the financial system. Ongoing bullion industry data that we illustrated here shows that this trend appears to only be increasing as the months and years progress. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.